Hey YouTube! So today we are gonna talk about how to buy dips in a bull market. Okay, this is just for bull market. So we're gonna look at BTC. I know you hear people say all the time, "Hey, buy the dip, buy the dip," but which dip? BTC is volatile. We'll talk about the volatility in a moment, but yeah, it's super volatile, and the best strategy in a bull market, for especially for new traders or people that they're nervous. You shouldn't be nervous about the money. Invest what you can afford to lose. Obviously, you don't want to lose it, but yeah. Okay, so let's get started. Not financial advice. This video is educational. It's for entertainment, blah, 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 blah. All right. How to buy the dips in a bull market. What I do is I switch the screen over to one that doesn't have a bunch of lines on it. And here is the 4-hour BTC. Okay. And on here, I have the EMA 21 and I have the EMA 200. That's it. You see that this is Binance. I'm usually on Coinbase. It doesn't really matter which exchange. It's up to you, or Bitfinex or whatever you want to do. But this volume doesn't look right to me. So I usually don't trade on this one. I'm just using this chart right now just to show you guys an example. There's no lines on it and whatnot. So I don't use indicators. Volume is important, but I don't use colored volume. Okay. If whenever there's for every buyer, there's a seller, and for every seller, there's a buyer. So when they get everyone to capitulate, you'll always notice, like, yeah, this is for volume. This is not a good chart at all. Let's go to one that's okay. This is a way more accurate chart. You see, when they get everyone to capitulate, give up, right. Everyone's just panicking, and everyone just hits the sell button, sell button, sell button, sell button. You'll see the biggest candles usually are right on these capitulations, right? And here, another big candle right at the bottom of this one. Here, biggest candle right here is right at that bottom, right? So I turn off the color volume because, yeah, while the small guys are capitulating and, sell, 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 the big guy, he's buying. Okay. So I don't like to look at that. I like to look at tall volume spikes. That's a really good sign of something, right? Here's a tall one, and boom, look, this is really telling you, okay, we're breaking out, we're going to the moon. So volume spikes are important, but I turn off the color because I think the color can throw your mind off. And I also use the Heikin-Ashi charts instead of regular candle charts. Heikin-Ashi kind of will show you, if you switch it back to the candles, you'll see it's just like red, green. But Heikin-Ashi is just, it really smooths out. Heikin-Ashi stands for average price. And so it really helps to see trends better. Okay. All right. So how do you buy the dips? So let's just switch quickly back over to this guy. We won't look at the volume. So how I buy the dips in a bull market is I wait till it dips below the 200 EMA. That's it. Or maybe a bounce off the EMA 200. So say if we were buying way back here, we were threatening the all-time high. We were trying to break through. This is actually exactly when I got in this last bull market. I bought like right in here, beginning of December. And I don't always follow my rules. Lots of times I usually don't. I gotta get my wife to trade. I tell her the rules and she trades because she's way more patient than I am. But I really wanted to get in, so I got in. But yeah, it came down. It touched on the EMA 200. This is on the 4-hour chart. In a bull market, I like to use the 4-hour chart. In my next video, I'll show you how to buy in the bear market. how to buy the dips in a bear market. But boom, perfect little touch. And then also, you can also, as a second kind of like confirmation, or maybe second and third confirmation. So you put in where the all-time high was. So once it pierces through the all-time high, and if there was a volume, so let's quickly go back to this guy. It touched, boom. Okay, so it went through the all-time high. You know, this is, or all-time high was way back there. But anyways, you see this recent high, it went through, and it went through with volume. You know, there's a big volume spike here. So that's your third indicator. You always want a volume confirmation. So it touched on the EMA, perfect time to buy. You can dollar cost average. You don't have to buy. You shouldn't buy all at once. Lots of times when I'm buying, I'll do, you know, 0.1 Bitcoin, 0.1 Bitcoin, 0.1 Bitcoin. I'll just, you know, wait an hour, 0.1 Bitcoin. Wait 2 hours, 0.1 Bitcoin. So just dollar cost average in. But whenever it touches or drops below this EMA in a bull market, is a perfect time to buy. Now, when to get out, maybe that's another video. There's definitely, you know, you definitely can devise your own strategy when to get out. So when you know, professional traders, they generally don't get out on the way up, right? They wait until they think it has peaked, and they're the ones that are kind of like selling, the first ones to sell on this backside. And then once enough of them have started their selling, then everyone kind of capitulates. Then there's the dead cat bounce. And definitely after the dead cat bounce, the professionals are definitely now taking their profits, because if the dead cat bounce does not get higher than this previous high, it's going down. Okay, that's just how it is. It's going down. So getting out here, or waiting for that dead cat bounce and then getting out right here, like on the backside. You know, if you're getting in at 20 and you're getting out at 38.9, you're happy. You're never going to get out at the top. But most professionals do not sell on the way up, because you don't know when it's going to stop. So they wait. Lots of times they wait for that dead cat bounce, and then they sell on the backside right here. Okay. And another confirmation could be, you could draw the, you know, the trend line. I don't really believe in trend lines too much, but you could definitely draw that trend line, and, you know, it bounces off the trend line, right? That first bounce, and then you had your dead cat bounce, and then as soon as it like doesn't, and then it starts going back down, you know it's done for. Yeah, the market's going to do what the market's going to do. You just don't be the one that's holding the bag. So right here is the perfect time to get out of that trade. Okay, so let it come back down, goes below the EMA 200. Yeah, rebuy, go for it. You could buy on this first one. You don't know if it's, you know, that there might only be one. So I would buy here, or buy here, or buy here, anywhere in here. Dollar cost average, 0.1, 0.1, 0.1, 0.1. You know, this is a 4-hour chart. So this is, you know, this is like a whole day's worth of trading underneath the EMA. Goes up, comes back down. Now you've had a double bottom. Goes back up again. Elon tweets something, comes back down and does a little touch on the EMA. That's like the final confirmation. Boom, we shot up to the moon. And again, the dead cat bounce wasn't very high, but still, if you got in, say you got in maybe here after this dead cat, or maybe you already got in, so that's not dead. Maybe you already got in here, you got in at 30,000, and or even if you waited and got in, you know, up here at 38. For this trade, actually, I got in at 38, and yeah. So even if you're, you know, when people are capitulating and everyone's jumping at like say 54, it bounced here. It bounced down to on the first bounce. Pretty sure it bounced to 54 initially. Oh no, this is the 58 top. This isn't the 61 top. Okay, this one was different. But anyways, again, it's better to sell on the backside. Obviously, if you're still in profits, you know, you definitely want to sell on the backside. Again, comes back down. You can buy below the EMA 200. And this is only buying in a bull market. You know, you have a very strong conviction that it's going to go higher. It's going to go higher. You know, trend is your friend. So you're buying below the EMA again, perfect. You know, dollar cost average down here. Maybe it comes down and tests it again, but this is good. It's testing it. You know, now you got confirmation, and we went up again. You can sell on the backside. So this green line here, you see this green line was a trend line. Once it broke through, you can definitely say, okay, this trend is over, and you can sell on the backside, and you're still going to be in huge profit. Comes back down. Now this is definitely a dead cat bounce. And just don't buy in here. You don't want to buy in here. Take your profits, go to the beach for 2 weeks. Just chill. Do not buy in this stuff, because it's just going to be bloody, right? Don't try and do little day trading and you know, just wait. That's all you got to do. Just wait. So wait. Oh, it dips below the EMA 200. Okay, dollar cost average, buy in here. Now we've come up, and now we've come down, and we're bouncing off of the EMA right now. So I think it's probably going to take off now. No, not financial advice, just my opinion. And yeah, so now it's bouncing off here, and we're probably going to pump higher. So definitely, if it breaks through 60,000, we're going to pump higher. All right, so if you haven't already done so, this would be a great time to smash the like button. All right, so really, in a bull market, trend is your friend. Buy buy Bitcoin, dollar cost average when it dips below the EMA 200, and I think you'll be happy camper. All right. Volatility. Why is there such volatility in Bitcoin? Well, cryptocurrency is an amazing technology, and it is the future. And I'm glad that you found cryptocurrency. I know everyone always wishes they find cryptocurrencies as soon as they kind of they have the blue pill, no, actually it's the red pill. Yeah, the red pill. Once you've taken the red pill, you wish that you had discovered cryptocurrency a long time before. But crypto trading is the wild, wild west. So why is there volatility? Well, it's kind of twofold. When the market is trending up, there's not a lot of shorters, right? And so, you know, lots of times in a regular market, the longs are punishing the shorters, and that's how they're making their money. But when the trend is when the trend is and everyone knows that, you know, Bitcoin's on a run right now, then to make money they have to pretty much take advantage of all the greedy people that are leveraging, taking big long leveraged positions, greedy positions. You know, they're leveraging 10x, 20x, 100x. So a lot of these YouTubers are recommending leverage. They're just, you know, they want to get the affiliate commission. That's really all they don't really care about you. If you're looking for like one YouTuber that really cares about you and recommends against leverage, you should probably follow Cryptos R Us. This guy is awesome. His name's George. Awesome community, and he really, you know, he's done leverage trading himself before. And yeah, I've traded for almost 30 years. I do use leverage myself nowadays, but if you can, I only use 2 or 3 max, three max, and I make sure my liquidation price is so low. Like essentially, for me to get liquidated, you know, Bitcoin would have to be 50% overnight, and or even more probably, and I would never let my position actually get liquidated. I would sell my position at a loss long before it got to my liquidation price. So if you're buying way below the EMA here, you don't need to use leverage. If you want to use leverage, not financial advice, don't use more than 3. Okay, 3 times. So yeah. That's really volatility in a nutshell. The whales, they shake the market. So you tell your friend, hey, get into Bitcoin. And so your friend buys Bitcoin, and then Bitcoin drops 10% the very next day. Well, lots of times that friend is going to be like, you're an idiot and this sucks. And they sell, you know, they don't understand the volatility. And so new traders do this all the time. This happens every single day, and this happens to I still fall for it. I still fall for it. You know, I still capitulate sometimes. Sometimes I don't, but there's times when I do. Like 2 weeks ago, I capitulated right after the 62. I guess it's been a month ago now, right? This is the I had an awesome trade, made a lot of money, and I thought, you know, kind of thought we were going to 80. I thought there'd be a bounce. I actually took the profit, and then I reopened a new trade. And then as soon as it started just dumping, I was just like, oh, well, I just want to get out. Now, I could have, you know, I got out because what the hell, I'll just take the loss and buy at a better price. But I could have probably wrote it out too, but maybe not. You know, it's better to maybe to sell when you're wrong. It's usually better just to get out of the trade but say you entered like right here, and there's the EMA, and so just hold at that point. You know, there's no point in maybe getting out, because you're just going to get kind of like shaken in, shaken out, shaken in, shaken out, and you're just going to take lots of little losses, and those little losses, they'll add up. So if to be a lot safer, just follow my strategy, or design your own strategy. Buy when it dips below the EMA 200 on the 4-hour chart. All right, so that's it. I'll make another video on how to buy in a bear market, but obviously that video is not really needed right now because we're not in a bear market. We're in a bull market. All right, guys, thanks for watching the video. Smash the like button. If you're looking for one awesome YouTuber, I really recommend George. George is awesome. Cryptos Are Us, 2 videos a day. This guy's super awesome. You can watch me if you want, but I'll never compare to this guy. All right, thanks, guys. Take care.